Hey, it's Alyssa Bryden with Virtual Heights Accounting. This is the kind of part two of a spend money bill video we have. The basics of that video is really that it goes over what a spend money and what a bill is in Xero. And we got some comments just that they're wanting more on what that really means. And so I wanted to provide some context and provide some additional information on what that really means. So what is the difference between a bill and a spend money? Well, as we covered in that video, spend money is a direct to the bank. Bill is an accounts payable, something that you have basically you've it's the expenses incurred. You've either got a delivery of the item, maybe you purchased some golf balls and you got the delivery, but you have not yet paid the supplier yet, and so that is due maybe in 15 days, maybe in 30 days. But whatever it is, the item, you have the item in your possession, or they've already performed the service and they've invoiced you, but the payment is due later. So that means you get to pay later, and it means the money isn't going to leave your bank account maybe right away. So that's what so that is how it's treated in Xero. Spend money if it's direct to the bank account or credit card. Bill if you're going to pay later. And why this matters is all about cash or accrual accounting. We are required in most business cases to use accrual accounting, which means that you do have to book the expense in the period to which it occurred. You also have to book the revenue in the period to which it occurred. So when you book that expense, which is great, then you get the deduction for that period for tax purposes as well. Now, if it's sitting here in your bills, you can also look at those under your reports, aged payable summary. This is going to show you your bills here. All right, so that's what you can see is things that you've already spent, you've got the deduction for, that you have not yet paid. And this is where it can get even more fun in Xero in terms of what the features that you can use around booking it as a bill and making sure you're doing it that way, rather than just waiting until the payment goes out and booking it that way. Why using the accounts payable the accounts payable module, I guess is what it would be referred to in maybe another accounting software, but in here we just call it bills. So it can help you figure out your cash management. Yes, it will be correct for accounting purposes. So that way your year-end accountant won't have to accrue an accounts payable, because your accounts payable will be correct. It will be correct on a month-to-month basis if you're using adding them as bills if they aren't due today. But taking a look in here, what we can also do is Xero also has the feature. They have the due date. You can see when these bills are due. You also have the ability to have a plan date. So you can put this as, yeah, this one's due on the 9th. I'm gonna pay it on the 9th, right there. All right, and this one is due on the 30th, so I'll pay that one on the 30th, and I can go in here and kind of plan my accounts payable according to the plan dates. The other thing in Xero I can do is go up to the short-term cash. And when they're arranged as bills, I can do a bit of cash planning. So I've also gone into, as part of this sales overview, and done the scheduled dates for money coming in. So now I'm going into the business short-term cash flow, and this is where my bank account is currently at. And as you see, I'm paying bills. Uh-oh, I have more going out than I have coming in. So that means from December 9th right now to the 24th, I'm going to be in a negative cash position. So what do I do? Well, one, I can make sure I have a line of credit so that my bank doesn't go into overdraft. And if that's in place, then that's where I'm comfortable with using. That's okay to use that overdraft. I could put in some personal cash to get through this cash flow shortage and make sure I just deposit it now, knowing that possibly we are going to be cash flow positive in the future, and maybe beyond that I can get repaid. Or I can also see if there is a way we can either negotiate on the supplier side to adjust some of our payments so that we don't get into a cash flow negative position, or on the receivable side, maybe there's something we can do there. So for example, on the sales, I can see that there was this one sale coming through. And so maybe I haven't, this is going to be due this, but I haven't maybe sent this yet. I haven't sent it yet. And maybe I realized that this one I set up as I gave them a month to pay, but normally the supplier does pay within 12 days. So maybe I did an incorrect on the due date, or there's a way that I could maybe invoice it in 2 batches, get it a little quicker. But for this one, say we are able to get the amount a little earlier. And then how about we're able to get the amount a little earlier, but we're only going to get half of it on this one. And then I'm going to do a second invoice for the other half. Because maybe I haven't sent this one out yet. So I'm going to remind myself I'm going to do a second invoice for the other half. And that way we can collect those amounts a bit sooner. Okay. So same amounts, I was just kind of adjusting my collections. It's the same, you could ask for a deposit up front, things like that. So this one I'm not going to expect till the 8th, as long as they're paying on time. Sorry, I meant to do the 8th. And this one, I'm going to expect the 22nd. Sorry, that one, I'm going to expect, yeah, the 22nd. So that way, by asking for this kind of maybe more upfront deposit, or splitting maybe a longer like if it's a contract for hours, maybe don't wait till the end of the month to invoice, but invoice every 2 weeks. That can really help with cash flow. So now when we top in there, let's take a look at how that's adjusted our cash flow. So now we have some low days. We want to make sure we're collecting the amounts that were set out, but this is also a little more comfortable. We're only getting as low as $774 in the bank account. So this is where using the bills can really help. It can help you kind of time, and using the cash flow, it can help you kind of time that. If you even want to make this more comfortable, you can go take a look at your bills and say, okay, well, I've talked with one supplier. He's actually okay with getting paid a little later because he knows I'm in a cash crunch. He's okay with maybe not getting paid until I get paid on that one invoice in December. And so I can change that. Take a look at how that affects the short-term cash flow, and really use those planning tools in here. So that's kind of the second part of using, and it's not just, I guess, the spend money and the bills, but using the accounts receivable area as well. When you are tracking things in real time, what in the period you're able to project and use those balances moving forward, and it will make your accountant a lot happier as well, because they won't have to do the adjustments at year end for accrual accounting that we have to do. So I hope that helps, and that's a good second parter for that first part. If you have any more comments, be sure to comment on the station for anything you want to see in future, or more areas you want to delve into. Thanks. Take care.